how many of you are franchisees here? Most of you are looking for franchising, right? Is that? So I don't know how we'll structure it in a sense, but okay, fine. I think to begin with, we'll start with the introductions here. Sanjay is the managing partner and founder of Aurum Equity Partners. Sanjay, would you like to say a few words about yourself?
Thanks, Mahinder. Morning, ladies and gentlemen. So we're an investment bank. I've done this business for the last 25 years in India in various avatars. I would think that have had the opportunity to work across 4 to 5 business cycles and virtually looked at every industry from very early days to what it is today. So I really think one has seen the growth of India happen in front of the eyes in an active participatory way. And as a result of that, you've actually seen, been involved in a fair number of successful and unsuccessful transactions, both acquisitions as well as funding. And I hope I can share some of my learnings with you.
We have Ajit Deshmukh here from Equirus Capital Private Limited. They are actually investment bankers and help people like you raise money.
Thank you, and good afternoon to everybody. Equirus is, like you said, a mid-market merchant banker. I've been a banker long enough to, like my colleague said, long enough to see some of the successful transactions that we got funded 10 years ago, and some not so successful transactions which got funded either as long as 10 years ago or recently. So have been seeing ups and downs and have a lot of history behind us. So other way to put it is kind of getting old in the business. So with that history, I would like to share our thoughts with you.
Thank you, Ajit. Just to introduce myself, my name is Mahit Swaroop. I am Managing Director of Vigo Capital. We are a $450 million fund and invest in SMEs. Alok has been a venture capitalist and been actually a promoter like most of you here earlier, an entrepreneur, became a venture capitalist, and again, back to entrepreneurship.
Thanks, man.
Alok.
As man mentioned, I've started a company before, was in venture capital for last 10 odd years. Have now founded a company called Indifi. We are a platform for small business financing. And one of the things that we do is to enable franchisors to create financing programs for their franchisees. Mostly around debt capital. We believe that at the franchisee level, it's mostly the franchisee's equity and debt capital that should supplement that. So happy to touch upon that as we go along.
We have Murli from Everstone Capital Advisors, and Everstone is a very aggressive investor in the market here with having different platforms. And one of the platforms they have is F&B, which is actually a format which lends itself to franchising quite a lot. So Murli.
Hi everybody. I am Murlidhar and I am representing Everstone Capital Advisors here for it's a private equity fund which extensively invests in F&B businesses in India. And we have done almost 2 rounds of funding for fundraising for investments in F&B businesses. And today we operate almost a few major brands in the country in F&B areas.
I think to begin with, can I start with you, Alok? Right? Since the audience would relate with you the most, and you would relate with the audience in the sense that you have been an entrepreneur and been an investor and back to entrepreneurship. In the sense that what should an entrepreneur be doing? A couple of tips, if you can give them, that they become attractive for people like us to be looking at them.
Yeah, I think in a franchisee realm, there are clearly 2 entities, right? From a franchisor standpoint, the biggest asset that they build is the brand. But that brand is built on back of standardization of processes, of the offering to the customer. And so if there are people who are looking at building value as a franchisor, I think it is critical that they can demonstrate what their brand delivers, how it delivers, both along the cost dimension, but more importantly around customer experience and standardization dimension. At the franchisee level, by and large, because they are in some sense leasing the brand out, if they are individual franchisees with 1 or 2 stores, it's unlikely that venture capital or private equity will get interested in that. Obviously, large corporate franchisees regularly raise money from PE groups, not just in India but globally. And there, the operating capability to expand the business is the most important criteria. So depending on what role you're in, I think the answers to what makes you attractive for a private equity business would vary a little bit.
Sanjay, you are a prolific angel investor, right? How would you value a franchisee, right? In the sense as Alok raised the point that they don't own the brand in a way. That brand is equally valuable. It's more valuable than...
So, if you look at the various methods, in a sense, is very standard. The whole methodology of valuing a franchisee. There are 3 approaches to... I'm being a little academic in my answer, but let me explain. One is the cost approach, which is how much money have you invested into the business, and therefore, at one crude level, that's the value of the business. The second most scientific approach is what is called the income approach, where you are saying, how much money does this business generate? Can I do a cash flow of this business to figure out this business makes so many crores every year after paying the franchisor his fees, and therefore, what kind of free cash flow do I generate? What kind of EBITDA do I generate? And what is the, NPV of such cash flow, which is called the income approach. And lastly is what is called the market, which is looking at comparable transactions, looking at listed company multiples, and to see how the business is valued. So let me take another example. If a big brand, and I'm not going to specifics, if a Starbucks came to India in a market where there were coffee chains well established as a business proposition, and you had the likes of, Cafe Coffee Day, Costa, Barista, and so many others, fighting for a market, and a premium brand enters, if I have to take the franchise for Starbucks, I would assume that I will be expected to pay a premium, and therefore it'll be a very different basis of valuation, more probably driven by the latter 2 methods than the former. So I think the important part for the audience is to figure out, what is the business you're in, what product, what's the potential, what business stage does the business exist in India, right? And of course the future, and adopt a method using one of these, options. And this is quite standard in nature. I jokingly tell people that actually valuations are not worth the paper they're written on. But you can often suit objectives. So you have to negotiate the value in the right way to achieve it. But, for the benefit of the audience over here, these would be standard practices, the 3 methods anywhere in the world.
Thanks, Sanjay. I think, how many people are seeking funding here in the audience? Quite a few of you, right? So, yeah, that's what I think is, you have potential clients here, Ajit. So I don't know, they're franchisors or they're franchisees. So how would you pick? Would you take the mandate from a franchisor more easily or a franchisee?
Tough question, to be honest. I think when we look for a mandate from franchisor or franchisee, we look for different characteristics. And let me give you what we look for. Like my colleague pointed out, when I'm looking for franchisor, I'm looking for differentiation in the intellectual property. And I'm really figuring out whether this intellectual property is something which has either been proven in other markets and can be replicated here, or there is something very differentiated and can be done in India. So for example, if you look at particularly Indian markets, then you're looking at Ayurveda and those type of things, which are very, very specific to Indian markets and really can go global. When I'm looking for franchisee, I'm really looking for the two things. One is the execution capability, and one is the geographical coverage that the franchisee can have. And one of the prime examples that I give from a capital markets perspective is the largest pizza guys in India, and Domino's. There was a time when Domino's India, which had the franchisee from the US company, had a market capitalization which was higher than the US company itself. Okay? And which is sort of proves that India itself was a fairly large market, and Domino's India was able to prove their execution capability and capitalize on the market. So, to that extent, if we get a franchisor like the pizza company, we are happy to take a mandate there also.
Thanks, Ajit. So let's come to Murli. Murli, you have been investing aggressively in various formats, including F&B, which is basically led by franchisees and franchisors, right? If you're not governed by any NDAs, could you tell the audience your kind of investments and why have you done those investments?
In line with the current trends in the market and the overall industrial scenario, we have observed that some of the industries that are really offering potential for good growth and expansion in the country has been one of the prime criteria for us in choosing our investments. F&B happens to be one of the lead platforms in that, in the sense that there is quite a lot of expansion in F&B businesses, as we have all seen, with lots of multinational brands coming into India and willing to, there are individual entrepreneurs also who are very eager to make investments. So franchising as such offers a great potential in the Indian markets as of now. And that has been one of the key drivers for us to set focus on franchising, especially in F&B areas.
Thanks, Murli. I think before we lose the audience to the lunch, we'll open the floor for question and answers. I think we belong to a community where we like hearing entrepreneurs rather than we telling the entrepreneurs what we are looking for.